Technology stocks are back in the driver's seat, and that shift is calming nerves across global markets. Stock markets around the world moved higher in recent trading, led by a recovery in technology shares. The rebound helped ease a stretch of anxiety tied to one central question: are artificial intelligence valuations getting too far ahead of reality? Here is the backdrop. Over the past year, AI enthusiasm has pushed prices for chipmakers, software companies, and cloud platforms to historically high levels. Investors were willing to pay a premium because the growth story was compelling. But markets are sensitive. Any sign that AI spending might slow, or that the payoff is further away than expected, can trigger sharp and sudden sell-offs. That is exactly the kind of turbulence markets have been working through. The rebound changes the near-term picture, but context matters here. Technology stocks carry enormous weight in major market indexes. So when they rise, the headline numbers can look stronger than the broader market actually is. Not every stock is participating equally. Index-level gains, driven by a handful of large tech names, can mask weaker performance in the rest of the market. Investors reading the signal from these moves need to account for that. Beyond stocks, other markets shifted in ways consistent with a so-called risk-on session, the kind of day where investors are leaning into growth assets and stepping back from safe havens. Government bond yields edged higher, which typically happens when demand for the safety of bonds eases. The dollar and gold, both of which tend to attract buyers when uncertainty rises, gave back some ground. Currencies tied to economic growth held up better. None of this happens in a vacuum. Markets are simultaneously processing a busy stretch of economic data, commentary from central bank officials, and a wave of corporate earnings. The AI theme sits squarely in the middle of all three. Investors are scrutinizing whether the massive capital spending by major technology companies on AI infrastructure is actually translating into revenue. That question has driven some of the biggest single-day swings in tech shares in recent quarters, in both directions. The durability of this rebound is the open question. If upcoming earnings reports show that AI investment is generating real, measurable returns, the recovery in tech stocks could hold. If the data disappoint, the pullback could resume just as quickly. The practical takeaway: when markets move sharply on tech-driven momentum, check how broad the participation actually is. A rally that is heavily concentrated in a few large names tells a different story than one where gains are spread across sectors, and the distinction matters for how much weight you put on the move. This briefing is brought to you by First Financial News, clear, daily coverage of the economy and markets at firstfinancialnews.com.